Hey everybody, this is Chris, and if you're like me, you're probably spending a whole lot more time at home than you expected to because of this whole Corona thing. And with interest rates going as crazy as they are, I've got a lot of questions from my friends, family, and clients asking me, hey Chris, should I be refinancing right now? So before you try to figure out that question of should you refinance, there's two major things that you have to answer. Number one, can you refinance? And that's something that your loan officer is going to help you with. And number two, should you refinance? And that's a question that you have to answer for yourself. First of all, you have to start off by understanding your situation and your goals. What is your situation? Where are you right now in your credit? Where are you with your debt to income ratio? Where are you in terms of your equity position in your house or your loan to value? And what loan are you currently in? And what are your goals? Are you just trying to refinance because a rate sounds better and more sexy? Or are you trying to lower your payment? Are you trying to shorten your mortgage term? Are you trying to consolidate debt? Are you trying to refinance to get out of a mortgage insurance? Which, if you're in an FHA loan right now, that's a heck of an idea. So once you understand where you are and what your goals are, and your loan officer's on the same page, they're going to help give you some options. That's when it's your decision to figure out should you do it. Where is your break-even point? When are you going to start making your money back from the investment of 2 to 5% worth of your loan to try to get a loan refinanced? With any option, you need to truly understand what the short-term advantages and disadvantages are and the long-term advantages and disadvantages are before you make any decision. Okay, so let's talk about the elephant in the room. What is going on with interest rates? In early March of 2020, interest rates hit an all-time low. They've never been this low. So what's going on with interest rates now? The Fed dropped the interest rate to zero and interest rates on mortgages went up. Even though the Fed dropped the interest rate, and that's typically an indicator and an influencer of what mortgage interest rates are, it's not the only thing. Mortgage interest rates are based on the market, not necessarily the Fed rate. So with the decrease in the Fed rate and the already low interest rates, mortgage applications went up 75% in 1 month. It went from an industry that funded $2 trillion worth of loans last year to on pace in 1 month to fund almost $4 trillion in a year. Doubling the infrastructure is not something that the industry was ready to do. So because of that, interest rates have gone up pretty considerably since those lower rates. Now they're still low and all the indicators are saying that they're going to stay low. But right now the interest rates are bouncing around like a rubber ball down a highway. My suggestion is talk to your loan officer, understand your situation, understand your goals, understand the can you do it, and understand the should you do it. Keep an eye on those interest rates, and when they get down to where you feel comfortable, where it makes sense for you, where that break-even point makes sense for you, then call them up and be ready to go, because we are very overwhelmed in this industry right now, and the faster you can get your stuff in, the more efficient you are with the things that your loan officer asks you for, the better off it's going to be for all of us, because we're going to be able to get your loan in and out faster. And the interest rates are going to be fluctuating with the rest of the world right now. So good luck with everything. Please stay safe. This is Chris saying, stay safe.